My miscalculation last Friday led to a 7.66% return on investment today. Last Friday, I set up this Darvis box over here as a trading range that I was confident the market would trade in. However, it blew through that. And then I said that if it blew through this Darvis box, it would hit this support level and be stuck in this support level. But it blew through that. Now we're looking at support levels that go all the way back to 2020. Last night I looked at futures before trading started today. Actually, let me go back. Last Friday I wondered if I should have closed out some of my positions here, because over the weekend some momentum traders thought that the market was going to rebound off of that it was oversold. I didn't think it was oversold, but it made me question my shorts for the weekend. But after watching the futures come in last night, I kind of knew that the bears were out and it was going to go down, and it went back down hard today, delicately exiting my shorts. Herein lies the conflict. Do I let my winners run, or do I take profits? The question becomes, what are you confident about the market? I was 90% exposed in leveraged shorts, and I've been burned by greed in the past, so I know I needed to take some profits. I closed out about 20% of my shorts. I'm still very exposed in the short realm. So if the market does pull back, I do need some sort of hedge. And what I did is I took out puts on the VIX. And as you can see, the VIX is at a pretty high level right here. And if it comes down at all, I'll make money on the puts. I'll probably lose money overall, but this will act as a hedge against any losses that I do get in my short. Confident that I'm set up for whatever the market brings next. I imagine there's more selling in the future, but not at this pace. We've had 2 days of gaps that are pretty aggressive. When the market does settle, I'll short the Qs again, but it will be with PSQ. So the market's in bad shape. One of the indicators that I really like is this 100 moving average, and it's not 100-day. I've got it on the weekly chart. I saw this on YouTube somewhere. Some guy showed it, and it seems to be pretty accurate. If you go back to 1982 and follow it along, it really can tell you it will bounce off of. If it's in a bull run, it will bounce off the 100-week moving average, which is about 2 years. It'll bounce off of it. But then if there is a recession, this 100-week moving average, it really bounces off hard off of it. Comes right back down. It did with the dot-com bubble, and once again with the financial crisis. We are definitely through the 100-week moving average at this point. So now the question becomes, how low can this possibly go at this point? What I've got here, going back to the dot-com, we lost about 50% in the S&P, and during the financial crisis, we lost about 57% in the S&P. 50% retraction on the S&P. We're looking at levels down around 2,400. That could be the bottom of this market. If you take a look at the last two, the dot-com lasted about 2.5 years. The financial from top to bottom lasted about 1.5 years from top to bottom. So if we just go with a single 1.5 years here, we're going to end up somewhere in July of 2023 will be when we reach the bottom.